Good morning. It's Thursday, September 6th, 2007, and we're looking to take a position trade on the E-mini Russell 2000. It is just before the open, and we have up here a chart of the 4-minute chart of the Russell 2000 with yesterday's distribution function shown here on the left, as well as the standard deviations and VWAP and peak volume price shown by the dotted lines here. You see that the VWAP and the PVP are virtually on top of one another, which implies a symmetric distribution, which you can see quite clearly. Just by looking at the distribution, you can see it's quite symmetric. So we'll be looking for a trade which will take us back to the volume weighted average price. We'll either look for a trade at 795, 60, or if it breaks through there at the third standard deviation, 797.30 up here. And that's the plan for the day. A short trade back to the VWAP. The market is opened, and here's the first 4-minute bar developing on the chart. And we'll just sit and wait and see how this develops. We'll see whether or not we should take a bounce off the second standard deviation, or possibly wait till it reaches somewhere in the vicinity of the third standard deviation. And that would be our position trade for the day. If we get a trade up here at the third standard deviation, that would give us a nice 5-point move back down to the VWAP. If we get one trade at 795 or thereabouts, that would give us a nice trade back to the VWAP as well. So either one would be very nice to have. We'll just watch this and see exactly where the market tells us to take an entry. So far we have a nice up bar on the open. We've moved above the second standard deviation, and possibly we might move up to the third at 797.30. We'll see. If the next bar moves back down below 795.60, we'll take that trade. If not, we'll just wait. Like the best entry possible on this trade. It looks like market will close the first 4-minute bar below that second standard deviation. But we'll wait and see. The previous close is shown here at 794.70, so we're up above that. Okay, here's the close of the first 4 minutes. Let's see where the second bar goes. you get a downdraft on this thing, we'll simply enter the trade. On that close. Looks like the market's coming down. It's touching the previous close, 794.70. Bounce back up again. Previous close, by the way, is a HUP, a hold-up price. You see exactly what happened. At this HUP, bounced right off and moved right back up. Then it touched the second standard deviation. Another HUP, bounced right off, moved back down. Moving back down to the previous close again. Second attempt to break through there. Bouncing off it. Pausing. Jiggling around that previous close. Bounced off that, moving back up again. So we'll just sit here and wait. The market's in the region between the previous close and the second standard deviation, yesterday's second standard deviation of the VWAP. 2 HUP points. Perhaps you would like to see this on the dome. Let's move the dome in here. Okay, there's our dome. You can see what price is doing on the dome. Okay, the 4-minute bar is about to end. And done. All right, where are we going to go from here? Up or down? If we get below the low here, we'll take the trade. If we move higher, we'll wait. Low here, 794.60. So we take an entry at 794.50. Put our stop limit order in there. Wait to see if we can get a fill. Okay, we're filled. We're in this trade. And let's take this down at 792.30, 42.50. Okay, here's our profit target, 792.50. That's right now one tick above The VWAP, which is at 792.32 at the moment. One tick above that would be 792.42, and the nearest higher tick would be 792.50. We will adjust this profit target as time goes by if this VWAP continues to rise, which it most likely will do unless the market drops very precipitously. And our stop loss target is just above the second standard deviation at 795.91, so 796 will be our stop loss. So let's set that. So there's our stop loss, 796. Let's see if we can make some money on this trade. Okay, market's moving down. We're below the first standard deviation. Let's see if we can get down to our profit target, 792.50. That would be a nice 2-point move. Okay, you understand the justification now for this kind of trade. It's a counter trend trade from the previous day. The VWAP and the peak volume price are right on top of one another. Market didn't get above the second standard deviation. And so if the symmetry of the market is such that it will remain symmetric, then the only thing price can do is move back down to the VWAP and perhaps even move in the opposite direction, even below that. But we won't be that greedy. We'll be happy to take our profit at the VWAP, which is right now 792.36. And we're below the first standard deviation. We'll just wait this out, see where this takes us. This point up here at 795.70 could very well be the high of the day. But we'll see. We'll stay in here until either our profit target is hit or our stop loss is hit, whichever comes first. We take the trades as they come. And at the moment, the most probable type of trade to take is a counter trend trade because of the symmetry associated with the volume distribution function. So we'll just sit here and watch. Okay, market's now below the first standard deviation, moving in our direction. Again, VWAP at 792.36. No, can't now. Okay, still moving down. Okay, almost at our profit target. Again, we just wait. Looks like the VWAP is going to move up again after this bar. So we may have to move our profit target up one tick. VWAP at 792.38. Again, expectation is we should get down to at least the VWAP or lower. If we were trading more than one contract, we would simply exit part of it at the VWAP and let the rest of it ride to possibly the first standard deviation here below the VWAP or the second standard deviation down here, and move our stop to break even at that point. But we only have one contract, so we only take that contract off when we hit our profit target. Again, 792.50. And we're close. $793. You get 5 more ticks. Move down. Now, some of you might say, hey, we're so close, why don't we just exit the trade now? Well, that's for the nervous Nellies who don't want to ride it out. You should ride your trades out. $792.39 is the VWAP. Let's see if we're going to touch that on this bar. Come on, give us a fill. We're there. Touched. Touched again. Touched again. Look at that. Doesn't this happen all the time? Profit target touched but doesn't get filled? Another attempt. Touched. 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 Come on. Go for it. Bingo. We're home free. Okay, so that's the way a position trade goes. And to summarize this, we looked at the volume distribution function from yesterday before the market opened, and we saw that we had a symmetric-like distribution, which you saw here. Over on the left, peak volume price and the volume weighted average price are right on top of one another. That's the signature of a symmetric distribution. Market opened somewhere down here, and our plan was to take a short when it touched either the second standard deviation and backed off, or moved up to the third standard deviation and backed off. Turned out that the market moved up to the second standard deviation, as you see here, touched, backed off, and then we took our entry on the next bar after that, just below the low of this second 4-minute bar, with our profit target at the 792.50 area and a stop loss at the 795, 796 area. That's it. And as I said earlier, if you were in with more than one contract, you'd take part of it off here and wait till you get to the first standard deviation below the VWAP. Possibly take some more off at that point. And if you still had more contracts, just hang on. See where the market takes you, possibly down to the second standard deviation. At which point you should exit entirely. Why? You might expect the market to move right back to the VWAP again if this symmetric distribution maintains itself. Okay, have a good trading day.